What up, traders? So today we're going to discuss liquidity. I'm going to show you exactly how to use liquidity in your trading plan, regardless if you are an ICT, SMC trader, or you use support and resistance, you use trend lines, or even you use indicators. I'll show you exactly how to identify liquidity on your charts to help strengthen your trade setups and give you more confidence. By the end of this video, you should be able to, number one, confidently predict where price will move to next. Number two, you should increase your strike rate. And number three, most importantly, gain more confidence in your setup. So your trade management should get better, having that confidence, knowing where price will actually move to next. Now, for a little added bonus, I'm going to throw in a trading strategy using liquidity specifically to help you pass your next funding challenge. So if you want that, please watch all the way through to the end and I'll reveal that strategy to help you with your next funding challenge. So let's hop into charts and get straight into it. All right. So when you're looking at a chart and you're looking at levels where liquidity is or where liquidity rests, you're going to look at levels where price has come to and left aggressively. And the best way to look at that is to read the candlesticks and look for wicks, aggressive, strong wicks that price has come to and left. And so right here, I've denoted this as in the ICT or the smart money trading community, I guess you want to say, we would look at these levels where price, like for instance, sell side liquidity, where price will come to and leave. A lot of support and resistance traders will look at that as a support level where it's by price comes, bounces off, goes higher. And the same thing for a rejection level, right? We look at that as buy side liquidity, where price will come to reject strongly and leave. Okay. So it's essentially same thing, just a different terminology or a different way of looking at, or a different way of looking at it. Okay. And so here's a trade that I did not take this morning, but I'm actually recording this in real time. We've seen price reject from this level. And so if I am, for instance, I'm using like moving averages or something, all right? Like if I'm using basic 220 moving average strategy, I'm looking for price I'm looking to short below those moving averages, right? And so we have this would be a major sell side liquidity pool, and this would be a major buy side. When I say major, I mean like a swing low, swing high that price ran from. And for that instance, so this swing low to that swing high, we are looking to draw prices, looking to act as a magnet, right? And draw to these levels. And so if I'm using a basic strategy like this, I'm looking for price to, number one, I'm looking for these potentially, I guess, these moving averages to cross, and I'm going to trade below that 20. So like, here's a perfect example of this. So we have both moving averages. We have the 20 below the 200, and we have this candle that closed below the 20. So I'm looking to enter on that opening of that next candle, right? And you want to ride the momentum. Now, it hasn't reached this level yet, but obviously this is not a video on trade management or anything like that, or risk management. But if you, obviously this went for 3.5 R. So this level here would be over 5 R trying to attack that. And that's that very well still, this swing low very well can still be hit later in the day. But obviously, this is still a winning trade at 1R, 2R, or even 3R, depending on how you manage your risk and how you manage your trade. So these are levels where we're just looking for price to most likely draw to next. Okay. And that goes into, it ties into you having your bias. Now, if I were to be, using support and resistance, right? Then you can essentially, as a support and resistance trader, when price leaves, obviously there's multiple setups. Like you can short once you see that wick, that strong wick, and you may want to enter here and then put your stop loss above that swing high or that buy side liquidity, and attack this level. Now this was a 4.8R trade. Now, granted, obviously, once again, still a winning trade. You got at least 3R on here before price came back, and you would still technically be in this trade. So that's one way of looking at it, right? You short at a rejection level, and another trade here, this could be seen as support. This little minor swing low here, price came through, closed above, and then you got these wicks and these candle bodies closing above. You could have traded this, and this is not like a support and resistance video, but like I said, I'm just trying to show you different ways you could use this. So this could have been price came through, it took liquidity, now price is bouncing around. You could, if you were a support and resistance trader, you could have actually went long here. And now if I am trading smart money concepts, I typically trade imbalances. So I'm trading fair value gaps, order blocks, things of that nature. So this here would have been a fair value gap or a SIBI that I would have looked to get into. Now, my strategy, I'm typically looking from swing highs to swing lows. I'm looking to measure the mean threshold, or the I guess the equilibrium, or the 50% level. So I just take my fibs and run it from that swing low to that swing high. Anything above the 50% level is premium pricing. Anything below that is a discount. So essentially, I want to go long at a discount and I want to go short at a premium level. Okay. And so I would kind of further denote this as like, this would be anything above the 50% level is a premium. Anything below will be a discount, right? So I could take the fib away, and that's typically how I'm using it from smart money concept perspective. So I see this imbalance. This imbalance actually lines up. It's at a premium, and my trade would have been just like a tick or two higher above where that imbalance was. And obviously I would have put my stop loss above that candle, and I would have targeted, this would have been target 1 and this would be target 2, right? Now, obviously I would have been stopped out at this point on this particular trade, because prices now, it's coming to a discount, and it's looking like this level, or this buy side liquidity pool or rejection level, is the next level that price wants to be attracted to. But this is a good trade still, and I'm on a 1 minute chart, by the way. So obviously price is going to go up and down on a 1 minute chart, but I wanted to present this on a 1 minute chart just because we can see things happen in real time a lot quicker than rather than me showing it to you on an hourly chart or a 15-minute chart. So So yeah, so this I would have at least gotten 1R on this because I would have already peeled off my trade management. Like I'm always taking off at 1R and I would have let the rest run and I would have locked my stop. So that would have been my trade, right? If I would have taken it or considered that trade. So now prices coming at a discount. We came into a discount. It didn't come here. It did attack this sell side liquidity or this support level. Came through it, ran through it. Now it's repricing higher. Now, as we reprice higher at a discount, granted, I wouldn't want to go long at this point, even though this level is the most likely level to be targeted next, right? This is the next liquidity level that will get price will most likely be attracted to. But because, like I said, my rule-based system, I go long at a discount and I go short at a premium. And so with that being said, I would not have any interest in going long in a premium level. I would like to see price come lower, dip lower, and then essentially, maybe this fair value gap or this imbalance would be the level that I would be interested in going long at. Okay. That's not to say that now, if there are specific drivers of the market, like if there's some fundamental catalysts or macroeconomic data that's being released during that time, and market sentiment is strong in one area where we have intermarket analysis. It's showing, all the indices going higher. We have like weakness in the dollar, weakness in the volatility index and things of that nature. And just like I said, overall market sentiment, I will bend my rules and I will go long in a premium if all those other things are in alignment, right? In this instance, we're on this day, we're actually not. And I'm not going to bore you and go into details of my entire trading system on this one video, but I just want to show you and put your eyes where, when you're trading liquidity or when you are looking at liquidity, it's not necessarily, it's a way of you framing your setup regardless of what strategy you use. So like I said, whether you are using basic support and resistance if you're using basic moving averages as a strategy, or whether you use other indicators, you can look at these levels and just read them, simply just reading those wicks, right? Reading those wicks where price moves from aggressively, swing highs, swing lows. We all use different, we use different terminology, but like not to confuse anyone. And I just want to show everyone how you can actually read these levels and, just help you frame your setups a little bit better, right? And I showed from kind of like a quick snippet of my scalping model of what I look for on a 1 minute chart, but everyone can take this and just start drawing out these levels, and you'll see that price typically is going to more often than not is going to always be attracted to these different levels. Now, obviously there's a time element and things of that nature, because yes, this is probably if I'm short, and that's my bias, and I'm not looking to long, I'm going to wait to see another short setup kind of happen. And I know that this will be the level that we're going to attack next. But right now in this current price action, we're long. I think we'll come here, and then, maybe, I mean, honestly, I don't get into the predicting the entire day, right? Because I'm a scalper. I'm like in and out. I'm not trying to predict the whole session, the whole day, even though I do top down analysis, and I have like a overall bias, I guess you want to say, from a daily perspective. But when I'm framing a setup within my little time window, I'm just looking at it from that perspective. So other than that, that's how you look at it. Go through your charts. I honestly could have, cherry picked and went in hindsight and cherry picked certain levels. But I rather have done this in real time so you can see price being, attracted to these specific levels. So other than that, if you guys have any questions, check out the next video where, I can kind of break down my actual strategy a little bit more. And till next time, talk to you guys soon.